Hey folks, welcome to a product review at Finominal. Today we're going to look at Vanguard's PRIMECAP fund, which trades under the ticker VPMCX. Now, the fund has a very long track record. It manages an astonishing $80 billion, and it is focused on large cap gold stocks trading in the US. So quite a simple strategy, but let's find out what makes this product so successful. And we're going to kick off with a benchmarking exercise. Now, our alpha analyzer tool suggests the Russell 3000 as a benchmark, but we're going to ignore that because we do know that this fund is focused on large cap growth stocks. So we're going to take the S&P 500 Growth Index. Now, we do see that since 2001, effectively the fund has outperformed the S&P 500 Growth Index quite handsomely. And I do believe actually that track record goes even back further in time. Having said that, if we do look at the excess returns over time, we can see that most of that can be attributed to the period between 2001 and 2006. And over the last kind of like 18 years or so, there's no outperformance. And this might indicate that VPMCX is one of those large funds that effectively is living off its track record. But given its size, is much more challenged to generate outperformance in today's much more competitive markets. Especially with such a large AUM. Now, let's actually have a look at the drivers of risk and return. And so we run a returns-based factor exposure analysis, where it's actually quite difficult to make something out of that because we don't see very consistent exposures to factors on the positive and negative side. The only exception might be consistently negative exposure to the low volatility factor, which we could reconcile with growth stocks being more volatile. Now, that's with regards to factor betas. Let's move on to alpha attribution. So we see compared to the S&P 500 Growth Index that there's an outperformance in 14 out of 25 years and alpha generation in 13 out of 21 years, which is not bad. Having said that, if we look at the return contribution on a per annum basis, we see that the alpha was large and positive in a lot of the early years, but has been much flatter or non-existent most recently. And we can also see the same thing in the kind of cumulative return contribution, that in the early years, alpha was a large part of the total return versus, basically the last decade or 2 decades, it's primarily beta that investors are getting. Now, this is VPMCX on a standalone basis. And before we move on to peers, let's have a quick look in terms of how the portfolio of VPMCX compares to that of its benchmark. And we're going to take IVW, which is an ETF that tracks the S&P 500 Growth Index. Now, from a fund overlap perspective, we see that VPMCX has a portfolio of 174 stocks compared to 332 for the S&P 500 Growth Index, and there's an overlap of 68 stocks. Percentage-wise, it would be 24% overlap, which is not that small actually. Now, as mentioned, let's have a quick look at peers. So we've selected 4 other funds that are all kind of large cap growth funds, specifically all ETFs. And so let's kick off with a performance analysis. Now we see that since 2010, the performance of VPMCX is kind of like right in the middle of the pack. And there's neither like outperformance or underperformance. We can have a look at the Sharpe ratios, which are actually relatively narrow. So VPMCX generated a Sharpe ratio of 0.81, very similar to IVW at 0.8. The product from Invesco slightly lower, but the other ones, in terms of the other Vanguard product and the Schwab product, are almost identical. Now, it is worth mentioning that VPMCX is more expensive at 38 basis points. You can buy the product from Schwab at 4 basis points. What's more interesting, however, that if you look at the style box analysis, and again, we're going to take the right benchmark here, that if you look at VPMCX and its peers compared to the S&P 500 growth ETF, which is that yellow dot, that there's some characteristics of VPMCX that are not that favorable. Now we do see what is actually favorable, that from a valuation perspective, it's on the cheaper side compared to some of the peers. From a growth perspective, actually it's low, more like low EPS growth and low sales growth, which is not great for a growth focused one. We can see also that it's more has higher volatility and low momentum than again the index. And even from a quality perspective, it doesn't look that favorable. So that kind of summarizes our review of VPMCX. So it's a product that has a long-term stellar track record, but you have to acknowledge that the fund is managing $80 billion, which makes it very difficult to outperform. And we can see that since 2006, you effectively get the same performance as with the S&P 500 Growth Index. And at 38 basis points, it's not particularly cheap. And what kind of makes it less attractive is the style exposures. Specifically that from a growth perspective, and it doesn't matter if you take EPS growth or sales growth wide, it looks worse than some of these other products. Same thing for momentum and volatility, it looks worse. And also from quality perspective. Now, there's lots of products like that out there. So if you're interested in large cap growth funds, there's plenty of good alternatives. Hope that helps. Have a nice day.